Hello traders, my name is Logan with Funding Talent. Today is April 13th, and today we're making a quick video for you guys on exactly what cryptos are, what cryptos aim to do, how you can trade them, and the benefits of doing so. So without any further delay, let's get right into the video. So traders, here we are, and first we're going to dive directly into what cryptos really are. Cryptography is the practice of sending secure encrypted messages between two or more parties. Cryptography allows digital currency transactions to be pseudonymous, secure, and trustless with no bank or intermediary required. Cryptocurrencies use cryptography to allow transactions to be anonymous and secure, which means you do not need to know anything about a person to pay them and perform a transaction with them. A crypto wallet. When you buy cryptos, you need to have a wallet. Crypto wallets store your private keys, keeping your crypto safe and accessible. They allow you to send, receive, and spend cryptocurrencies. If you lose access to these keys, though, which are in your wallet, you lose access to your coins and therefore your money. Although you would automatically have a wallet when you open up a cryptocurrency exchange account, which would be an exchange-hosted wallet, you do not have control over the private and public keys. Having control of your keys means having control of your coins, which means having control of your money. Exchanges work like a bank. However, there's always a probability of an exchange shutting down or being hacked, resulting in a loss of coins, such as the Mt. Gox exchange, which most cryptocurrency investors know of, which happened earlier in the 2013 to 2014 range, I believe. Wallets are less important for active traders. DeFi, which is also short for decentralized finance. It is an umbrella term for peer-to-peer financial services on public blockchains. Primarily right now, that is Ethereum. DeFi is an overarching term for a variety of financial services on public blockchains. The difference is that it is faster than a bank and does not require a third party or any transaction fees that are associated with a bank. Why is DeFi important? DeFi takes digital currencies and expands on in a way that resembles a digital Wall Street. DeFi has the power to create open and fair financial markets that are accessible to anyone that has a crypto wallet and an internet connection. With this DeFi coming up around the world, traders are using it as a peer-to-peer trading service for certain crypto assets. This would allow you to buy and sell these assets without any kind of brokerage, and this means that there are no spreads or commissions involved. Protocols. Protocols are a basic set of rules that allow data to be shared between computers, and for cryptocurrencies, they establish the structure of the blockchain. These protocols are the basis of the blockchain, and without them, it could not even exist. Bitcoin miners contribute to the protocol, allowing it to exist, and therefore are given Bitcoin as payment for upholding the system in the form of a protocol. So miners are not really mining for Bitcoin, essentially. What they're doing is they're contributing their computer hardware to the protocol, to the blockchain, and are therefore rewarded for each amount of Bitcoin that they mine from contributing to the protocol. Moving into stablecoins. Stablecoins are a digital currency that is pegged to a stable reserve asset, such as the US dollar or gold. Stablecoins are designed to reduce volatility relative to unpegged currencies like Bitcoin. The world is split into floating and pegged currencies. A floating exchange rate is determined by the private market through supply and demand. A fixed or pegged rate is the rate a government, also the central bank, sets and maintains as the official exchange rate. The reasons to peg currency are pretty much linked to stability. When a currency is not pegged, it is a fiat currency, and some examples today of currencies that are pegged are the Chinese yuan and the Bahraini dollar, which are both pegged to the United States dollar. In the world of crypto, it is the same thing. Stablecoins are pegged cryptocurrencies, while the rest of the cryptocurrency space is floating, so the price is constantly changing and floating, and it's not pegged to something specifically. The USDC coin, the US dollar coin, is pegged to the relative price of one single dollar. Stablecoins are free from the volatility of non-pegged cryptocurrencies, while also taking some of the most powerful properties. So what exactly is a cryptocurrency? A cryptocurrency is designed to be used over the internet and can be used for anonymous or identified peer-to-peer transactions. Bitcoin, which launched in 2008, was the first cryptocurrency, and it remained by far the largest, most influential, and best known, with its market dominance of 69.37 on average, and right now it's hovering closer to 59%. A cryptocurrency is very similar to a bank's balance sheet. Each individual crypto has its own blockchain, which is constantly verified record of every single transaction made using that currency. So if you made a currency transaction on Ethereum, I would be able to see it by looking at the Ethereum blockchain, as would anybody, because it's being constantly verified. A larger argument for cryptocurrencies right now is economic equality. Think of locations around the world with hyperinflation, such as Turkey or Venezuela. Cryptocurrencies can provide an alternative to dysfunctional fiat currencies for savings, payments, and investments. Cryptocurrencies open an entirely new world for active traders, and it is a new market with increased volatility and ease of access. So what is a blockchain? As we were just saying, a blockchain is a list of transactions that anyone can view or verify. Every transaction that is made on Bitcoin is held and can be seen in the Bitcoin blockchain. The same applies to Ethereum, Litecoin, Stellar, or Ripple. The blockchain idea has turned out to become an entire platform which encompasses a large range of applications that can be built on top of. The future of finance and money. Crypto is the return to trusted peer-to-peer transactions. This allows us to say goodbye to commissions and marked up prices as the middleman is removed from financial transactions. No longer are we limited to a single point of failure. If you wanted to break down the blockchain, you'd have to bring down every single computer on a worldwide basis in a matter of seconds. If a bank failed and you had your funds in that bank, you would lose access to your funds. Since Bitcoin is hosted all around the world on its blockchain, you will always be able to access your Bitcoin in almost any situation. So let's get into the benefits of trading cryptos. The number one benefit is going to be volatility. Despite the market being relatively new, it has experienced significant volatility due to huge amounts of short-term speculative interest. The volatility of cryptocurrencies is just one part of what makes this asset class so appealing. If you decide to explore the cryptocurrency market, make sure that you've done your research into what it is, hopefully this video helps, and also a proper risk management strategy, as it is very volatile and it definitely carries some risk. Number 2, heightened and improved liquidity. For our newer traders, liquidity is the ease of transfer into cash from an asset. When you close a position or investment, you are liquefying that position, pretty much just closing the order. So liquidity is largely important because it improves pricing and it allows quicker transaction times and therefore increased accuracy for technical analysis orders, as you are being able to be entered at any price you really want because there's so many orders in the open market. And the third benefit for crypto trading is going to be market hours. Cryptocurrency brokerages allow trading 24/7 as there is no centralized governance in the market. Although there may be periods of downtime when the market is adjusting to infrastructural updates, when they're updating the blockchains, and these updates are known as forks. And there are a ton of different types of crypto. There are thousands of different tokenized cryptocurrencies. The main differentiating factor between different cryptos is going to be their use case, what it's being used for, and the technology behind it, and what it does to help people. So some of the main currencies are going to be Bitcoin, Ethereum, and XRP, and then some of the main stable coins are going to be USDC coin, US dollar coin, or USDT, which is US Tether. So you might be asking, Logan, this is fantastic, but how can I trade crypto? You can open up a crypto brokerage account or a leverage-based trading account with multiple different brokers online, and you can also trade crypto actually in our program with any brokerage that we offer that also supports crypto trading. Right now, those brokerages are going to be specifically Hugo's Way, KOT Forex, FX Choice, and the Funding Talent servers. So traders, that was our video on cryptocurrencies. We hope that you took some value out of this video, and if you did, we ask that you please leave a like button on this video and subscribe for more videos coming out. If you're not already following us on all of our other social media platforms, be sure to do so because we're releasing new content every single day. As always, on behalf from everyone at Funding Talent, happy trading.